Good morning, traders, and welcome to BCR's morning market analysis. First up, let's talk a bit about the US dollar. The DXY weakened sharply after the Fed cut rates by 25 basis points and signaled a possible pause in cuts at the January meeting to wait for more data. Powell's comments that the baseline scenario does not include future rate hikes and the next step is unlikely to be a hike added to the dovish tone and helped push the index lower. Technically, bearish momentum remains dominant. The DXY sits near the lower end of the 98.2, 99.2 range and has closed below the 5 and 10-day moving averages for several sessions. And the MACD death cross and expanding bearish histogram suggest continued downside bias. The RSI is around 40, not yet deeply oversold. Key support is 98.14, which is Thursday's low. Beneath that is the psychological level of 98 and 97.8, which will become relevant after it breaks. On the upside, short-term resistance sits at 99.1 and 99.5, which is the confirmation zone for any short-term trend reversals. Next up, let's have a look at crude oil. WTI is trading around 57.8 per barrel after prices closed higher on news of a US seizure of an oil tanker near Venezuela, which is a headline that heightened near-term supply concerns. The EIA also reported US crude inventories fell by 1.8 million barrels last week. The market was expecting a 2.3 million barrel draw. This has left the market a bit cautious. Structurally, the market remains weighed down by a broader surplus narrative. WTI is oscillating in a narrow band between $57.5 and $60 and repeatedly encountering resistance near the $60 mark and the 61.58 mark, which is the 100-day SMA. The 57.5, 57.1 area acts as near-term support. Momentum readings show the MACD bars shortening and the RSI neutral, which is implying that there is limited conviction. Next up, let's have a look at gold, which rebounded through 42.30 on Thursday as the Fed's cut and Powell's remarks lifted expectations for further easing. The Fed's concurrent decision to begin purchasing short-term treasuries also helped ease money market strains and supported precious metals. A weaker US dollar, which is at 98 on the DXY, and a dip in the US 10-year yield towards the 4% mark reduced the opportunity cost of holding gold, while central bank buying and geopolitical risk, as always, provided additional structural support. From a technical perspective, bulls should watch the 4200 psychological level closely. A break below 4200 would open the focus towards 4170, 4165. Sustained strength above 42.45, 42.50 supply zone would open the door towards 42.78 and the psychological level of 4300 with eventual scope to challenge the all-time high of 43.81 if follow through appears. Lastly, let's have a look at the Australian dollar, which is trading around 66.60 near a 3-month high as the Australian data and softer US dollar have supported the pair. Australian payrolls showed a net loss of 21,300 jobs in November and unemployment held at the 4.3% mark, prompting markets to push potential RBA tightening further out towards the second half of 2026. Yet the RBA still flags tight labor markets and elevated wages. Technically, the pair is still in a clear uptrend, trading above the key 66-cent support and now eyeing 67. The resistance and the September high of 67.07 should be the target. Momentum indicators are constructive. RSI at 67, ADX at 24, pointing to a solid short-term trend. Though RSI proximity to overbought levels suggests that there could be possible volatility or consolidation ahead. Support levels to watch out would be the 66-cent psychological level and below that 65.53 and buyers dividing line at 65.37. Well, that's all for today's morning market analysis. Thank you for tuning in. As always, manage your risk and happy trading.